This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Hat trick. The three major indexes close at records as oil prices rise and investors grow increasingly optimistic about earnings.
Payday. Walmart, the nation's largest private employer, is the latest company to hike pay and issue bonuses. What the cash will mean to the economy.
Powering Bitcoin, why a small town in Washington has suddenly become the epicenter of the cryptocurrency craze. Those stories and more tonight on Nightly Business Report for Thursday, January 11th.
Good evening, everyone, and welcome. It is a familiar refrain, but it doesn't seem to get old. It was a record day on Wall Street. Again today, the major indexes rebounded from yesterday's brief stumble, extending the New Year's rally. And today, energy shares led the way on a rise in oil prices and a strong start to the earnings season, thanks to Delta's better-than-expected results and guidance. The Dow Jones Industrial Average advanced 205 points to 25,574. NASDAQ added 58, and the S&P 500 was up 19, rising on 7 of the first 8 trading sessions of the year.
The world's largest retailer is handing out pay raises. Walmart, which is also the nation's largest private employer, will pay workers a starting salary of $11 an hour. Employees are also getting a one-time bonus of up to $1,000, depending on how long a worker has been with the company. The CEO says the new tax law is giving the company the opportunity to be more competitive globally. In a statement, the company said, quote, "Today we are building on investments we've been making in associates in their wages and skills development," end quote. And in a separate announcement, Walmart is shuttering 63 of its Sam's Club's locations across the country. Several stores closed abruptly today, but others will be closed over the next few weeks. The Membership Warehouse store says that the decision was made to better align its locations with its strategy.
Now, Walmart is not the only company to increase pay and offer bonuses to workers lately. Eric Chemi is here to discuss that part of the story. Eric, how common has this trend been among the top 10, say, private employers in the country? Bonuses, heightened pay.
You know what's really interesting? When you look at those top 10 employers in this country, Walmart is the only one that has announced something like this. So that's actually unique what they're doing. And the top 10, those are companies like Amazon, Home Depot, IBM, these real big, giant household names. But Walmart is the only one that has a specific plan. The other companies have put out statements talking about the new tax law in general, but they haven't actually done
And they
something.
attributed this move to the new tax law.
Right, right.
You mentioned the fact that they've put out statements talking about it, how it might impact their businesses. If you go further than the top 10, what other companies have made a move, if at all, to raise wages?
So that's where it gets really interesting, because then you do see companies that are just outside this top 10, like an AT&T or a Wells Fargo or a Boeing. And then you start to see a lot of companies that have done wage hikes, one-time bonuses, or corporate investment, for example, more employee giving, infrastructure improvements, education spending, those kinds of things. So a lot of different approaches depending on the companies, but not in the top 10. It's all kind of 11 and onward.
There were a couple of things that were very interesting here to me. It was not only pay that they boosted.
Right.
They boosted some benefits, maternal and paternal leave and other things. I have to think that if Walmart does this, we will start to see more of that, not just in the second-tier companies, but in those top 10.
You would think so, because a few weeks ago, Walmart even said, we're running the numbers, we're working on this, and then here we are today with this announcement. So there are probably other companies that are still working on their numbers, and maybe in a few weeks they'll have an announcement. We also have earnings seasons coming up, so maybe companies want to get through that first, then get the PR bump a couple weeks after earnings with some new announcement like this.
Eric, thanks very much. Eric Chemi, appreciate it.
Yep.
So can rising wages and even those bonuses have a positive impact on the economy? Here to discuss that is Craig Dismuke. He is the chief economist at Vining Sparks. Craig, welcome. Nice to have you here. Thanks for joining us.
Good evening, Sue.
Tell me what you think the impact will be. As Eric just detailed, Walmart is the first in the top 10 to do it, but as he also pointed out, there are other companies lower down on the totem pole, if you will, that have been doing that.
Sure. Well, I think it's notable that it's Walmart. They're the world's largest private employer in the U.S. They employ 1.5 million people. They've commented that over half of the retail workers will benefit from this increase, and so I think they'll have a big impact on the retail space specifically. Being as large as they are and how many people that they'll affect. Number one, is going to drive up wages for a lot of folks, and then secondly, I think it'll spread to other companies, and I think it really reflects the fact that there is a tight labor market, that they're competing to retain their employees, and so I think it does reflect the tightness of the labor market and the fact that we will see a little bit better wage growth this year finally.
I can see a twofold effect here. If more and more companies do what Walmart and several others have done, and that is to increase pay to workers, and at the same time, you have workers getting more in their paychecks because of reduced withholding, that you've got a cash inflow into the economy that could make growth go up. Do you see it that way? And if so, by how much?
I do, Tyler, and we expect to see the consumer really drive growth this year. They drove growth in 2017, but the taxpayers are going to save $140 billion, we estimate, in 2018 from the tax law. And so then with all of these increases that we've seen, hundreds of companies that have announced pay raises, there's really going to be a double whammy. And I think that's great news for the consumer. It's good news for the economy. It's good news for the stock market. I think that's one of the reasons we've seen all of these record high closes that you talked about earlier, is because people have been anticipating this coming for a while. The wage growth part is really just the icing on the cake at this point.
But are there negatives to this?
There are negatives. I think the most acute negative, and really I don't want to dwell too much on this because it largely is a very positive development. We haven't seen wage gains of any material amount during this expansion, and so it's nice to see some potential wage gains. The most acute concern would be that it becomes inflationary. If you have so much demand for products and services that you start to see prices rising and inflation starts to rise faster than the Fed wants. Now, with inflation below their target already, I don't think it's a huge concern for us, but that is the most acute one. The longer term concern is that the more you raise wages, the more you raise labor costs, the more economic incentives businesses have to replace that labor with automated mechanisms. And so that'll be a longer term challenge. But in the short term, I think it's net, it's a very positive development.
On that note, Craig, thank you very much. Craig Dismuke with Vining Sparks.
And speaking of inflation, a key gauge of inflation fell for the first time in a year and a half. The Producer Price Index slipped 0.1% in December, which was below expectations. Some economists say the weak report could temper expectations that inflation will accelerate this year.
Still, others believe inflation will pick up, and that could pose a threat to government bond investors because it could erode the purchasing power of their fixed interest payments. So what's really happening in the bond market, and what do investors need to pay attention to? Here to talk about that is Victoria Fernandez, Crossmark Global Investments Managing Director. Victoria, nice to see you. Thanks so much for joining us today.
My pleasure, Sue.
Let's start with what you are watching for in the bond market as either a caution or a positive.
Sure. I know there's been a lot of headline news that has come out recently, and investors sometimes try to chase the market or make changes in the market based on what they're seeing. But really, most fixed income investors are longer term investors. So this is a time when they need to take a step back, look at the actual holdings that are in their portfolio and see if they're positioned properly for what they think is going to happen. If we do think there's going to be higher rates, if you feel like we're on that trajectory and that's going to continue, then you need to make sure you've got higher income securities, lower duration securities in your portfolio, and that you're not taking on risks that you didn't know you were taking. So we're really watching, obviously, what the central banks are doing, not just here, but the ECB as well. We're watching the inflation numbers, the wage numbers that come out, and obviously earnings that started today. That's going to be something to watch in the coming weeks.
You just said if you think rates are going higher, you'd want to go to lower duration, maybe some higher yielding products in your funds, in your individual portfolio. But what do you think? Do you think rates are going to be markedly higher? And if that is true, what would you do? What would you roll out and roll into?
Sure. So we have had some, individuals come out lately and say that they think we're going into a bear market for bonds. I don't think I would go that far and say that we're doing a bear market, but I do think we're going to see rates move higher. There's a lot of support for that. We have really strong equity markets. We have some of the uncertainty that's been priced into the market that's been removed a little bit. And we have some reduced exposure, at the ECB talking about maybe bringing back their bond buying program. So there's support for higher levels to an extent, but we have to remember we still haven't even hit the high of last year, that 263 level. So this is a time to just kind of temper your investments, make sure you've got some low volatility securities in there, get out of some of those really longer, lower coupon bonds, and put yourself a little bit shorter where you're going to reduce that interest rate risk.
Victoria, we'll leave it there. Thank you so much for joining us tonight.
My pleasure.
Victoria Fernandez with Crossmark Global Investments.
Well, in a low-rate environment like we've had for much of the past 15, 20 years, investors are drawn to utility stocks because of their low risk, high yields, and stable revenue streams. But this sector is sensitive to rate changes, and any increase could make bonds more attractive to risk-averse investors. So, if you do have utilities in your portfolio, what should you do? Joining us to talk about that is Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, I can think of this as a double-edged kind of thing. On the one hand, rising interest rates tend to be anathema to utility stocks. On the other hand, a better economy ought to increase their earnings.
And I think that's exactly right, Tyler. The first thing to do here is not panic, because at the end of the day, rates may go up a bit, but the effect is going to be modest, and the effect on you as an income investor in particular isn't going to matter. If you bought these securities for income, rising rates are not going to hurt your income. In fact, if you reinvest it, you'll actually get more income over time. So the first thing here is not to panic.
All right, so at this point then, do you take a look at the utilities that you have and see which ones perhaps are more vulnerable to rate increases, as modest as they might be? Or do you, and maybe sell some of those and add other aspects or other types of utilities to the portfolio, or not?
Well, utilities as a whole are indeed vulnerable to rate increases. So if you're really concerned about your capital value, you probably want to start backing off a little bit. But again, there's no need to do that wholesale. Cherry pick, look at the companies that you think are going to benefit least from a faster growing economy, because Tyler's point is dead right. Second of all, if you're looking at how we're going to reinvest this over time, you probably do want to reinvest the money in those utilities that have higher growth rates in their revenue and in their dividends. It's all a matter of making sure that you're riding the opportunities. But for utilities, even though there may be some short-term concerns, I don't see a massive problem.
And the one thing I always try and remind myself during rising rates, and it's been a long doggone time since we've had them, is that if the dividend is not cut, you're still getting that same income per share. And if you don't sell the bond, you're still getting the payout on that bond, right?
That's exactly right. And that's why I make the distinction. If you're buying them for income, your income is solid. In fact, your income might even go up. If you're worried about the capital value, then you might want to look at it. But from an income perspective, you're in good shape.
Brad, thanks so much. Appreciate it. Brad McMillan with Commonwealth Financial Network.
Up next, the cryptocurrency craze is going full bore in the Pacific Northwest.
This is one of the largest Bitcoin mining operations in all the United States. It's in Wenatchee, Washington State, 3 hours east of Seattle. Dozens of crypto miners are coming to Wenatchee. Why? They need a lot of power for these servers. I'll explain more coming up on Nightly Business Report.
A day of many moving parts in Washington, where a bipartisan group of senators said they have reached an agreement on immigration. The deal would protect undocumented immigrants, but some lawmakers, along with the White House, say they are not ready to endorse this deal. Now, the 6 senators say their agreement addresses the so-called dreamers, that is border security as well, and family-based so-called chain immigration. Immigration, of course, an issue closely watched by big business.
A small town in central Washington has become the epicenter of Bitcoin mining in the U.S. How did that happen? Well, it all starts with extremely cheap power. Michelle Caruso Cabrera is in Wenatchee, Washington.
Wenatchee, Washington, 3 hours east of Seattle and surrounded by beautiful mountains. Famous for its scrumptious apples, and now famous for something else. Bitcoin mining. More than a dozen cryptocurrency companies have started mining operations like this one. Mining is a process using extremely fast computer servers to solve complex mathematical equations. The reward for solving those equations? Bitcoin, a new digital currency.
We have about 1,800 servers in this location, and they are doing 2 things. 1, confirming the network. 2, racing to find the next group of Bitcoins.
Malachi Salcido has invested millions in 3 local mining facilities and is producing 5 to 7 Bitcoins per day. He believes the underlying software network of Bitcoin, known as blockchain, will become the payment system of the future.
What businesses is it not going to disrupt? Banking, securities transfers, interbank settlements, credit card services, PayPal.
But to run a mining operation like this one requires a lot of electricity. Malachi Salcido needs 7.5 megawatts of power. That's enough to power 11,000 homes. And that's why he's in Wenatchee, Washington, home to the Columbia River and a series of dams that provide extremely cheap hydroelectric power. Here, electricity costs between 2 and 3 cents per kilowatt hour. The average in the United States is more than 6 cents, and in some states, more than 10 cents. Steve Wright runs the Chelan County Public Utility. He says there are currently 12 large Bitcoin miners in the area, but with the recent dramatic rise in the price of Bitcoin, many more want to come.
Just in the last month, we've had about another 75 come through the door. So we've gone from just a few people out there who have been knocking on our door to all of a sudden people who are banging on the door pretty loudly.
But the infrastructure required to service miners is expensive. Just to lay a mile of cable for distribution can cost millions of dollars. He doesn't want to put the local taxpayer at risk.
What we don't want is people who come here to make a quick buck off of our low-cost electricity and then leave town and leave us holding the bag and leave the people of this community holding the bag.
With all the infrastructure you built for them.
That's right.
So they've started demanding cash up front for any major infrastructure costs for miners. Even though the power is perhaps the cheapest in the entire country, it's still Malachi Salcido's biggest cost.
We currently spend over $100,000 a month just on electrical costs.
It's a lot of money, but he's convinced it will pay off because he believes in Bitcoin. For Nightly Business Report, I'm Michelle Caruso Cabrera, Wenatchee, Washington.
It's a different kind of mine we're looking at there. Bitcoin mining could use more electricity this year than Argentina, that according to a new report from Morgan Stanley. The report also estimates that mining for cryptocurrencies would suck more power from global electrical grids this year than electric vehicles would draw in the next 7 years.
Well, the boom in cryptocurrencies has newly wealthy investors looking to spend it, and luxury real estate is fast becoming the ticket. That has luxury sellers hoping to cash in on the craze as well. Diana Olick has our report tonight from Malibu, California.
Dr. Wei Chen built this 5-bedroom, 7-bathroom beachfront oasis 10 years ago. The Malibu home is unlike any other architecturally, and Dr. Chen is unlike most sellers because he's willing to accept Bitcoin for part of the $45 million price tag.
I think we'll attract more international buyers than our country.
Do his neighbors think he's crazy?
Oh, yes.
But he thinks he's very logical.
So the whole concept of cryptocurrency is, in my opinion, it's going to be a future. It just depends which one is going to be what we call stabilized in the current market.
There are not a ton of $45 million buyers, but the boom in cryptocurrency wealth created new ones, especially international buyers.
They don't want to be taxed on their gains, so buying with these so far unregulated cryptocurrencies helps them fly under the radar. And for luxury sellers, that just opens up the pool of potential buyers.
That's our job in marketing property, especially luxury real estate, is never assume where the buyer is going to come from. Make sure we get this property out there and say we are open to all currencies, and crypto being one of them.
So $45 million worth of house.
US dollars, but also 3,125 Bitcoins as of the last 30 minutes.
Luxury real estate agent Tony Giordano has done a few crypto deals.
Somebody else is going to do it if you're not willing to do it.
Now he travels the country lecturing other agents on how to do it.
The one thing I'm trying to teach real estate agents is you better start getting familiar with this. Do your research, download a crypto wallet, buy $50 of Bitcoin, understand how to buy it and sell it, and start to realize this is a legitimate currency.
But still a highly volatile play in a brick and mortar market.
I'm not saying it's safe. I just want to take a risk for investment, just like everybody else.
For Nightly Business Report, I'm Diana Olick in Malibu.
A lot of Bitcoin. All right, Delta sees clear skies ahead, and that is where we begin tonight's market focus. The airline lifted its 2018 earnings guidance after it reported better than expected profit and sales. The company said passenger revenue improved in every region and said it expects the new tax law to offset higher fuel costs incurred during the quarter. Shares took off, rising nearly 5% to $58.52. And Pitney Bowes is reportedly drawing interest from some buyout firms, including Blackstone and Carlyle Group. Bloomberg says the Mail Management Company has held preliminary talks with those interested and that Pitney's CEO is open to a breakup or outright sale. Shares of Pitney Bowes rose about 15% to $13.36.
Buffalo Wild Wings sees sales for the year coming in below street expectations. The restaurant chain said it expects sales to fall just under 2%, but analysts were anticipating a 1.5% decline. Shares were off a tick to $156.70. Shares of Amazon rose for the 8th straight day after a pair of Wall Street firms raised their price target on the stock. Stifel Nicolaus raised its target to $1,425 a share, up from $1,313, while UBS is now coming in at $14.40 for Amazon, up from $12.50. Today, Amazon climbed nearly 2% to close at $1276.68.
And coming up, this flu season is packing a punch.
Doctors say this could be the worst U.S. flu season in nearly a decade. Coming up, we tell you what's driving it and what you can do to protect yourself.
The flu is estimated to cost the U.S. economy roughly $10.5 billion annually. And that figure does not even include lost productivity from sick days. And as Meg Terrell reports, this year's flu season is expected to be especially bad.
I think I got it on Wednesday.
Flu season is here, and already it appears to be more severe than usual. Flu is now widespread in 46 states, and hospitals and clinics are seeing a spike in patient visits with flu-like symptoms. A major reason is the strain of the virus that's circulating. It's called H3N2, and the Centers for Disease Control and Prevention says reports of that strain rapidly increased in the last weeks of December. Dr. Anthony Fauci at the National Institute of Allergy and Infectious Disease says it's a more severe strain, and the flu vaccine isn't providing as much protection this year.
A really good year of protection would be about 60% efficacy. We can't tell for sure right now, but we're estimating that it's going to be significantly less than that. It's going to probably be around 30% for the predominant strain.
Doctors we've spoken with say this is shaping up to be the worst U.S. flu season since the 2009 swine flu. That puts pressure on emergency departments like this one.
So last year, a busy day in our emergency department would have been 200, maybe up to 220. but every day this week we've been seeing 260, 270, and a major component of that is people with influenza-like symptoms.
And it's not just the patients who are getting sick.
When half of our staff is out sick with the flu, it's really hard to take care of our patients.
In addition to the surge of flu patients, hospitals are coping with spot shortages of IV saline bags, important for delivering medicines and hydration. Those products had already been in short supply, but production problems were exacerbated as Hurricane Maria hit facilities in Puerto Rico run by Baxter, a main supplier.
Habla Dr. Nelligan, solo quería chequear cómo está Ulises con la influenza.
And with ERs getting overwhelmed by flu patients, doctors at Stanford are encouraging the use of telemedicine for those without major complications, so patients can get the care they need without going out and risking spreading the flu further. Meanwhile, work is underway on a better flu shot, one that can work every year, regardless of which strains are circulating.
We want to get away from that intelligent guess game and be much more sure that if you get a vaccine that can protect against virtually any of the influenzas, that would be what we call the universal influenza vaccine. And that's what we're trying very hard to get to.
Dr. Fauci says that may be several years away. Meanwhile, doctors recommend staying home from work if you're sick, covering coughs, and washing hands with soap and water. And though the flu shot doesn't appear to be as effective this year, universally, public health experts still recommend getting one. For Nightly Business Report, I'm Meg Terrell in Palo Alto, California.
And before we go, here's another look at today's rally. The Dow advanced 205 points to 25,574. NASDAQ added 58, and the S&P 500 was up 19. That means it has risen 7 of the first 8 trading sessions of this new year.
And that'll do it for us tonight on NBR. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we will see you tomorrow.